All right. Good morning, good afternoon, good evening from wherever you are joining us from. This is Arvocap Asset Managers, and this is Let's Talk Fund Performance. I know we have been waiting for this session. We have been prepping, and we are here to tell you that the day is here, you are here, and we are ready to roll. From wherever you are joining us from, you are welcome. I want us to have a conversation. So let's make this engaging. Let's talk. Let's ask questions from on the chat box. We are live on Zoom. We are live on our Facebook page, Arvocap Asset Managers, and our YouTube channel, Arvocap Asset Managers. When you get there, you will be able to ask your questions. You'll be able to get the responses. And we will have a nice conversation even as we talk about the performance of Arvocap funds for the last 1 year. But before we do that, I want to welcome my very good panelists. I just want them to introduce themselves, and then I will tell us how we are going to proceed, even as we are going to have a very interactive night. Are you eager to learn and to know about our panelists? So drums roll, let's put our thumbs up, let's put our hands together as we welcome our panelists. And I'm going to start right from my right side here. Just tell us your name and what you do at Arvocap. Karibu sana.
Hi, thank you, John. I am Priyanka Shah, COO and co-founder of Arvocap Asset Managers. I head up the Family Office and Wealth Department.
Thank you, Priyanka. Makofi kwa Priyanka. Very nice. Thank you so much. Go to Wilson.
Hi, good evening. My name is Wilson Wariari, the Chief Investment Officer of Arvocap Asset Managers, heading up the investment teams and also the research teams.
Thank you so much. Asante sana, Wilson, the man behind the numbers. And last but not least, on my extreme right.
Welcome all. My name is Monica Moniki. I'm the CEO and co-founder of Arvocap Asset Managers. I've been in the space now of investments for about 16 years. So with a wealth of investment experience from my co-founders, together we make about 40 years of experience. So you're sitting here with people who have been in the spaces that you're navigating and that we are trying to offer you products. Welcome and looking forward to a beautiful session.
Thank you so much. Please appreciate our panelists tonight. All right, thank you. I know it is very Kenyan to ask whether people have joined, watu wamefika. So please, wherever you are, tell people that we have already arrived, we have already started, and we are on to answer your questions and to hear your feedback. So make sure that you make this a very interactive session. You can utilize the Q&A section on the Zoom webinar. You kindly have a question, you will be able to ask it there, or the comment section on the YouTube channel, and also the Facebook page. And even as we get started, I just want to make sure that we are all aligned. Tonight is all about you. Tonight is all about your goals. Tonight is all about transforming how we can use our funds as a bridge between you and your investment goals. And so at this point, I want to welcome our host, Alex Mwangi, who will be taking the webinar for us tonight. Please let's put those emojis and celebrate him, welcoming even as he comes to take over. Karibu sana bwana Alex.
Thank you. I really appreciate this opportunity that Arvocap has given me to be here to moderate this session. So to get started with this, let me give it a foundation. Now, Arvocap is part of Collective Investment Scheme, right? And we know there are 55 as at 31st March 2025, but only 39 that are active. So the question is, what makes Arvocap special? Monica, why should we trust Arvocap?
Thank you, Alex. Jumping right in straight. Besides being regulated by CMA, we are a fund management company with a wealth management strategy. What does this mean? This means that all our products and the 10 funds that we offer that will jump into it are all geared towards creating or helping an investor to create a portfolio that matches his or her own objectives. Not only do we do the funds, but we also offer advisory. So we'll not just leave you with the 10 funds there. You're trying to navigate, how do I use this? When do I invest in this one? But we help you identify which fund suits your needs. Also, we offer a diversification. And as you will see in our funds, we offer an investor diversification across different parameters, be it region, be it currency, be it risk profiles, be it asset classes. So we offer you a holistic, diversified solution. Also, I want to emphasize on our philosophy, which is transparency, innovation, and putting investors first always. We are your trusted partner, so that's a good reason why you should really work with us as an investment partner.
Amazing, amazing. That sounds quite comforting, right? Given the nature of competitiveness that we have in the market, and people are wondering, now in the list of all these many money market funds, where do we go? Who should we trust, right? And, there are many funds that are very quite old in the market. And now Arvocap has shown us a different trend of growth. You have really scaled height for the first 1 year. And listeners, this is what we are talking about. I want to show you some of these funds. Let me show you what our concern is with Arvocap. Now, they have different funds. Kenya Shillings Fund, we have USD Fund, and then we also have South African Rand Fund, right? Arvocap Money Market Fund gave us for 1 year, since that June 2024 to that July. All right, that's up to May 2025, right? So you gave us 12.72. GAO Fixed Income Distribution Fund 14.5%. That is in terms of return. Almasi Fixed Income Accumulation Fund 27.06%. Arvocap The Money Equity Fund 40%, right? That's not all. Now, for USD funds, Arvocap Eurofix Fixed Income Special Fund 9.86%. Quite a good return when it comes to US dollars. Probably Wilson is going to explain to us why do we have so much, rate of return for the Kenya shillings and not for the USD. Then we have Global Special Fund that gave us 14.83. Then Multi-Asset Strategy Fund 30.90. Then the last one that has been, making rounds in the street, and we are going to pose that question to you guys, is Arvocap Africa Equity Special Fund, which gave 54.33. That's quite a number there, right? You remember the times when such numbers could not even be in our minds, yeah? It's like a dream come true, right? Tell me, Monica, like, your work is to grow wealth for people. But there are people who have no idea what we talk about when we talk about what is savings, what is investment. Am I the right person? Do I have the capacity? Right? Is this thing meant for the rich people? Tell us.
Yes, and I think these are terminologies we need to break down to layman understanding. What is investing? What is investments? And when you understand what is investments, then you're able to use the investment vehicles or tools that are there because you now know what they are. So investments are a bridge or a pathway that connects your dreams to becoming goals and then becoming a reality. So simple things like, because maybe we may go and say, what is a goal? What is a dream? So we have loved ones, we have children. Maybe we want to plan for their higher education learning. That's a goal. Maybe your dream is even taking your young one to, say, a university or a college abroad. So that's a dream. So for us to make it a goal, we now come and start understanding, what does it take to get this child in that college or university? Maybe X amount, because this is the fee structure currently. So what do I need to do now to get this child there then? So that's what's investments. Because now you're going to start putting aside money slowly by slowly towards that goal. Again, if it's an asset, you're looking to purchase an asset, say your retirement home or a car or a machine for your factory or business. Assets do appreciate. So as you're planning to acquire that asset later, if you start putting in money just right now in your pocket or under the mattress or in a savings account, chances are your journey towards your goal may be longer. So we are bringing you a bridge that takes you there faster, right?
And as the CEO is saying, you have an asset in mind, or you have this goal in mind. You have a price, that you have put in mind. And as she is saying, prices of these goods or prices of these services will continue rising. But then the money that is under your mattress, that you are saving towards this goal, is being impacted by two things. There are two risks to it. One is inflation. And apart from inflation, the other one is currency depreciation, especially if your goal had any, you wanted to take a child abroad, or you wanted to buy this machine and you're buying it, in Chinese yuan or in US dollar. So there's currency depreciation out of it. So that means that if you just put your money saving without putting it anywhere that's growing, that's appreciating also in value, or it's giving you more value, then you run the risk of that by the time you thought you'll have accumulated enough for you to achieve this dream and this goal you had, actually you haven't. And that's the most important thing about investing. And that's why we invest. Not just to answer the question directly, why do we invest? So that we ensure that even as you work in, as you are saving towards these goals, that we know there are risks towards the money you are putting aside. You have an inflation and you have currency depreciation. How we control that is that, one, we invest in products that have returns higher than the inflation. And also, you have invest in products that will give you a diversification in terms of currency, hedging your risk on depreciation, that your currency also will depreciate. So that's the most important thing about investing. Then the other thing is we tap into the eighth wonder of the world, compounding. So the other reason as to why we do investing is to compound your returns. As you invest and that money or that gain that you have earned, it's been reinvested back, it's been earning, So that compounding aspect now will help you accelerate towards your goal and actually create this pathway that you're speaking about, ensure it's sustainable. It's a great bridge to take you to the next level.
Amazing. That's quite a deep explanation. Guys, if you keep your money under the mattress, you're saving, where it's not making any money for you. But when you invest in facts like Arvocap, where you're receiving some interest, that is equivalent to investing. Your money grows beyond the inflation rate and other factors that they have stated. Now, let's talk about Priyanka. I want to throw this to you, right? Even before, let me hold you there. Now, Wilson, let's continue this conversation. I've highlighted a lot of facts here. And I've had some questions when people go to your app. I came here to register for money market fund, but I can see the other very good funds offering very mesmerizing interest. Which one should I take? How do you select all these things, right?
We call it the nest of funds. And in this nest, there are different eggs, different golden eggs. From your money market funds to your board, let me categorize them into four broad categories because we categorize our products into four broad categories. We have the fixed income funds, we have the equity funds, we have the multi-asset strategy funds, and we have the ethical investing funds. And so for us, how you choose, as you come to this nest, how you pick the egg that you want to invest in, with that golden egg that you want to hatch, towards as you work towards this, your goals. We look at it more as goal-oriented and objective. What is your investment goal? What are you trying to achieve as an investor? And so help you identify. And if you go to our website, if you go to your laptop and you at the first page on our website, we have the product identifier. It's a flow chart. We have made it very easy for an investor that the first thing you do is identify a goal. And from that goal, this flow chart helps you to identify which product would match that. So that makes it easier for you that you're not lost within these 10 funds. That based on your goal, you can actually choose a product or an investment fund that actually meets that goal.
Amazing, amazing. That is what we call investing with a purpose, right? You don't just dump into any investment because it's giving a return. So you must have a goal, then you invest to fulfill that goal. Now we are back to you, Priyanka. Now this is a fund that we call the Almasi fund, Arvocap Almasi Fixed Income Asset Accumulation Fund. Yeah? I want you to tell us more about it, because last time for the 1 year you gave us 27%. That is outside the curve of the market from what we are used to. And there is this question that most people keep on asking me. Okay, you're saying that this fund is investing in government bonds, but we all know that the government bonds currently are giving 13, 14%. Yeah, the best that we have had is around 18%. So how are you able to pull in 27 investing in the bonds?
Yeah, that's a good question. Our Almasi Fixed Income Accumulation Fund is a fixed income fund. It invests in government bonds such as infrastructure bonds and FXDs, and it's suitable for investors with a low risk profile or with long-term goals and would like to see their funds accumulate and compound. It basically derives its income from three main components. Like you said, bonds right now are giving about 13%. So how are we giving the extra? So the first thing is that we have the average portfolio that's giving us, let's say, 13% without it being traded. The second part is we reinvest the coupons back into the fund. And so instead of giving an income like a traditional bond would, this accumulates your capital. And the third thing is it takes an active trading strategy. So just as shares, bonds have their own prices. And so in the secondary market, they appreciate and depreciate. And what we do is we get into the market and have an active trading strategy. So whether the market is basically going up or down, there are all these pockets of opportunity. And that's why Almasi would always be a very good and a good fund to stabilize any portfolio. We aim for 2% a month. And in the last 12 months, we had done 27.06. Yeah, I hope that answered your question.
Yes. And there is an addition to that.
Maybe what I can say when it comes to Almasi, this is a fund for a long-term solid goal that you have. Remember, I gave an example of a higher education learning, a retirement home, a certain asset you want to purchase. So this is the fund. It doesn't have the magics of the other funds you are saying. It's a comfortable fund that you can sleep at night. Our CIO loves saying this is the fund that you can put your money and you're able to sleep at night. Not to mean that the others you don't sleep, but of course there is the element of volatility, which we know is what brings the returns. So that's Almasi for you. Low.
27%, we are not sleeping with the 27%. That is why we want this comfort that this 27% is possible in the market, right? So, and you have said this fund, we can use it for long-term goals and all that. And that is where it falls into our investment. Because it's very important to us, we highlight these funds. Every fund, what goals can it be able to meet, right? What type of an investor should be able to take up this fund? Now, Monica, to you. Now, there's one basic, I usually call money market funds as the entry points of any investor. Anyone who doesn't understand anything and you want to start investing, you just go into money market fund. Then you learn the market. I've told you when people quote you up, they're coming there probably a money market fund. Then they see Arvocap Almasi and other equity funds. Then what makes this money market stand out in the market? Why should we flock there and say we must have a money market fund with Arvocap?
Yes, as you rightfully said, money market fund is the entry point of investing. And allow me to say this, that money market is not an investment per se, but rather more of a cash management tool. What do I mean? Money market rates move up and down depending on the change of interest rates. And these are rates that change without prior plans or long-term plan. It's if you look at money market funds, early last year we were seeing returns of north 17%. Within a year alone, we are down more than 10%. So you can imagine that goal we started talking about. You came and found out that this is the amount of money you need to get to this goal in 5 years, 10 years. And you chose money market fund as your investment choice. Then high chances are you'll not hit your goal. You'll not arrive. But let me explain because it has its role. So this is an investment that is very low risk. It has low exposures because of the underlying assets. And these are the T-bills, the T-bonds that are less than 18 months, and these are some commercial papers. Liquid or near liquid assets, again also cash deposits. So our Arvocap money market fund is unique because, one, it's not only a low entry which has 3,000 shillings as a minimum initial investment, but also it offers you wallets. This is a key unique feature with Arvocap's money market fund. I don't think there is any other in the country. And what are wallets? So you realize that you have a lot of short-term goals that you want to meet or you want to put money aside for. Short-term goals are like, today we are in July and you want to take your family for holiday in December. That's a short-term goal. You want to buy a phone, maybe within the next 3, 4, 5 months. That's a short-term goal. There is school fees, that the third term is coming. So maybe you want somewhere you can put your money for school fees. That's another short-term goal, and such like. So you can come to our wallet and open a wallet for every goal. You can even have a goal. There's a client who told me they have a goal for retail therapy. For those who understand what that is, that's the money they put aside to spoil themselves without guilt. Because again, remember, if you don't plan, you might even end up feeling guilty for spending over something that you should be spending on. So our money market funds give you that provision of creating a wallet and putting a goal up to as many goals as you can. Not only do we allow you to put a goal, there is one key trait that investors need to have: discipline, which lacks a lot. And you'll find people using even money market funds as a current account. Even paying, you're in the supermarket, you just pull up your phone, pay from your money market fund. So how have we instilled discipline in this fund? You can open a wallet and say holiday, to take my family for holiday in Mombasa. It will cost me X amount, let's say 200,000. Today I have 50,000. I'll put in that wallet and lock it. It will only unlock when I hit that amount or when that goal materializes. So what does that mean? You're forcing yourself to arrive to your goal. Remember, we said investments are bridges. So this is that bridge. Again, our money market funds can be used to level up. So you have come to our investment portfolio or offering. You have found out that Almasi, for you to invest in Almasi, you need 100,000. But you don't have 100,000 right now. What do? You start off with money market fund. You put the little money you have there. You pile it up. When it reaches 100,000, you can withdraw from money market and invest in Almasi, for example, or any other of the funds. Another thing is, say, project management. You'll find project managers or developers they have a huge amount of money that is not going to be deployed into the project one-off. So money market is another tool where you can put in your bulk amount of money, prepare your withdrawal or your schedule, and then be recalling or withdrawing money whenever it falls due. With our money market fund, within 24 hours, you have your money. So if it's something you need to pay tomorrow, you can recall your money today. So that's another tool that can be used. That's another way money market fund can be used. And you'll end up earning, maybe it may sound small coins, but at least you're not incurring a cost like you would maybe in a current account where even any transaction you're incurring a cost. Yeah.
Amazing. So money market fund is a parking fund. So there's controversy about money market funds where some people say it's an investment. Because when you compare with other, investment in the market, especially last year when we had 15 plus, right? But we know that on average, over 10 years, it averages between 8 to 10%. So this is why you need to keep your short-term cash. Then you inject into other goals that you have.
But even Alex, when those rates are that high, you take advantage of that. You put your money in the money market fund. But remember, we said it's a cash management. So you're managing your cash at that point to earn the high returns. Then when the returns start going down, and that's why you can see right now, there's a lot of withdrawals from money market funds because now clients are looking for a better return. So it's playing its role.
Amazing. So you take advantage when the rates are high, then you exit. And guys, money market funds are like bank accounts. You don't have to have one money market fund account. I usually say at least have 3. 1 for your emergency fund, which is very critical. 2 for the sinking fund. Sinking fund is where you put short-term goals like, you are paying for your child's education next month. You are going for the holiday, the therapy you are talking about, right? Money that you be accessing, that is a very good place. Then you spoke about where you accumulate your investment cash. If you have investment that require a bit of cash to get into, you can have a different money market fund where you accumulate that money, then you push it there. So at least 3 money market fund. So there's no excuse to say that, I have a money market fund. Now I won't go to Arvocap and experience the benefits that Monica spoke about. Right, thank you for that. Now, Wilson, I want us now to go into another area that is a bit difficult to comprehend, right? Let's look into Africa Equity Fund, right? Then the Money Fund and Arvocap Multi-Asset Strategy Special Fund.
For investors who are looking to participate in the stock market, then our equity funds gives you a platform for you to have your funds actively managed, to have a team of professional advisors, research analysts, who are actively every day following up on what's happening in the stock market, to manage risk, to manage volatility, and also to take the advantage of the opportunities that the market gives. And let me tell you, Alex, once you deep dive in the stock market, you realize there's numerous opportunities. And a lot of investors actually miss these opportunities because, one, as I said, sentiments. And at times, even when sentiments are changing, a lot of investors miss that wave. If you look at the Kenyan stock market, last year was a very good performing year. The NSE 25 index was up that 5%. The All-Share index was up 43%. This year, the NSE is up. The All-Share index is up. If you look at some of the counters, are up, quite significantly. Last year, we were trading Safaricom at 18 shillings. Now it's at 27 shillings. And so investors who are out of the stock market may not realize when these opportunities are beckoning. But now with our equity funds, we give them a platform, to actually participate in these. And for them, they can rest easy at their homes, knowing there's a team of professionals who are actively looking at these portfolios on their behalf. And for us, how we do and how we have managed to deliver these decent and beautiful returns on our equity portfolios, it's through these active strategies. from the research committee, the investment councils, the investment committee, analyzing everything that's happening within the marketplace, within our universe of investment counters that we are looking at. Establishing, our entry points and where to exit and all that. And through this active management of these portfolios, always being in the market looking for these opportunities, that's how we manage to deliver these decent returns. And for us, we believe we are here to make it great for investors to invest in the stock market. You don't have to fear it. There are a team of professionals doing it for you.
Amazing. Most people are a bit skeptical about share trading. You remember during Safaricom, we went there and bought the share at 5 shillings. Then after a few weeks, it's up to 2 point something, and people panicked, right? So people have been shying away from investing in the stock market, and that is why some people will even ask, does Arvocap help us buy shares in the market, right? And who is this person who should be investing in these equity funds, right? What goals? At what level? Do I come and invest in an equity fund without a money market fund or without an Almasi fund, right? I've just heard about investing and I've downloaded your app on a 53%. This is what I'm going to start with, right? What advice? What goal should we look up before investing in equity funds?
There's a beautiful thing that Priyanka likes speaking about, portfolios. And I know she speaks about it. And building portfolio. And taking clients through the act of building a portfolio. And when we speak about building portfolios, because our CEO told us, let's try to break this thing as simple as possible. When we speak about building a portfolio and building your goal, you have identified you have short-term goals. And for your short-term goals, the best product to pair with is your money market fund. It's good for short-term goals. You have your medium to long-term goals, okay? And in those medium to long-term goals, you have identified one product that can fit into that, which is your Almasi fund that Priyanka spoke about. But then at the same time, we have what we call accelerators to your goals. And that's the beauty about the equity funds. When you speak about the risk level, because now the other question is, client will say that, but I don't have the risk appetite to invest in shares. Today the share price is up, tomorrow is down. And that's where now the portfolio building aspect comes into play. That will help you and guide you that, let me just take an example of an investor Z, who is coming to invest Kenyan shillings 1 million. They have 1 million they want to buy, and they're like, do I buy the best performing fund, or do I just buy the money market? From one extreme edge to the other extreme edge in terms of, But when you go through, either you speak to a wealth advisor, or you go through the wealth, the flow chart, the product identifier flow chart on our website, then we can help you pair your goal. That you actually identify that out of this 1 million, there's this 200,000 that I actually need to utilize in the next few months. So for that, money market. Then, let me also build now the Almasi fund. Probably you're putting an additional 500,000 on the Almasi fund to help you work towards now this long-term, medium to long-term goal that you have. But then, you see now you already have a 70% in more of a low-risk portfolio. Giving you decent return, but low risk. Now that's why now you're building now to your stock fund, because they become accelerators to your underlying fixed income portfolio. That will say now the rest of the 300,000, I will divide it between probably Africa equity and the money equity, or I'll probably even do a currency diversification. So for us, it's about that aspect of helping you as you work towards your goal. We are giving you a cushion that if anything, when market volatility or turmoil, you have a cushion through your fixed income funds. But then on the other side, we are giving you accelerator funds, your equity funds. They help you accelerate faster towards your goals. because in a long-term basis, they tend to outperform. It's Warren Buffett who says that in a long-term basis, the equities market will always outperform, the board's portfolio. So equity funds, we find that even in the short term, they may be a bit, share price imetoka 27, imerudi 24. So there's a bit of volatility here and there in the equity markets that expected. But when you look at it in terms of a long term, 3 to 4, 5 years period, they tend to outperform these other portfolios. So they become very good accelerators within your portfolio.
Amazing. Priyanka, I want to ask you probably regarding that before Wilson, gives us some more tips. Now, first you must have a good risk appetite. You're talking is the next level with acceleration. Now, for these stocks, we have different funds. Are you only investing in local funds in our Nairobi Security Exchange, or they are global funds in this case, in this equity area?
Yeah. Our 10 funds are divided into 3 kind of locations, geographies. So we have local funds, we have an African fund, and we have global funds. So when it comes to our equity funds, our first global fund is the African Equity Fund. This is denominated in South African rand. Minimum investment is 15,000 rand, which comes up to about 100,000 shillings. It invests in 9 stock exchanges across Africa. And it gave a return of 56% in the last 13 months since inception. And I'll let Wilson speak more on that, and I'll go to the next one after.
Also Wilson, as we take that question, tell us, you have 2 equity funds. You're confused. Do you take there are 3. Yeah, you're going to tell us the third one, which is a USD one, and now the South Africa Rand, and now the Kenya Shillings Fund Equity Fund. Yeah, we are confused. There are too many choices. Which is which?
Now, beauty about diversification. And this one we speak to the returns that you have managed, the 6% that Priyanka has spoken about. That for us, we studied markets. We studied the investor appetite of the products. And from our investor, or the investor that we studied, we saw that it's an investor who is looking to participate in the equities market. However, there are limitations to our local markets in terms of, the number of shares you can do to create a portfolio. Also, even the number of sectors. But that our market is a bit highly dominated by finance sectors, or the financial sector, and telco. Basically, telco is just one telco. So how do we help investors who are looking to better manage their portfolios, to better manage their risk, to invest in the equities market by giving them more sectors? And that's where now the African Equities Fund came in. Because now the African Equities Fund gives us not only the financial and the telecom sectors here, gives us a wider breadth of those sector in that sector itself. Here we have just one telco. In the African market, you have almost 7 listed telcos that you can invest in. So basically, there is more opportunities for us to be more finance on how to invest into those into that sector. But then, in terms of now sector-wise, you find that now we have mining sector, we have chemical sectors. These are sectors that have, if you look at the performance the last 1 year, have outperformed, not only in Africa, but across the globe. As everything is happening across the world, global tensions here and there, trade tariffs, and people push to safe haven. And so some of the, what you call the gold and the PGM stock have performed very well. Your gold miners did very well. So mining sector has performed very well. But then after that, there's a bit about diversification of what we're helping clients achieve in the Africa Equities Fund. Because we had gold being a leader in the first quarter, but then as the rhetoric about tariff started abating, now there's more focus on to moving now towards global industrialization and picking up, into global economic growth. Then now there's industrial capacity, and so now there's higher demand of industrial metals, or metals that will help accelerate towards that. your palladium, your platinum have done very well. So for us now, we all have exposure to that through some of our African counters that we hold. That as gold take a pause, then palladium, platinum are taking the lead. So the palladium, platinum mining sectors have taken the lead in this Q2 and Q2, Q3 now. And so that's the beauty about how what the Africa Equities Fund helps us to achieve. And that's the beauty about this fund, that it allows us to move beyond these normal sectors to actually the other sectors that are listed in other markets that probably we are not a big mining country. And so probably we not have exposure to most of these. We are not big also in petrochemicals, so we may not have a good exposure into that. But other African countries are quite big in this. And so the African Equities Fund helps us achieve that. And by us, actively, as I said, our research team, our investment team, always looking for these opportunities, we managed to deliver the 56% return. We believe there are still a lot of opportunities within this market. We still, every day, we see great opportunities, great companies across Africa to invest into. We keep on doing their DD on each of these to see whether they fit within our universe, then within our portfolio, so that, we can invest into them. So it's been a great thing and great opportunities.
That's one of the 3 global funds that we have. The second global fund is our Global Equity Fund. It's denominated in dollars, and it invests in high-value stocks. The minimum investment is $1,000, and it gave a return of 19.8% in the last 13 months. So CIO, take it away.
So the same thing. When you come to the global markets, now you're speaking about a very wide universe. Speaking about MSI index, 3,400 listed companies across the globe. And so it also gives us a better opportunities and a bigger universe for us to even finance our investment strategy even further. So our Global Equities Fund is a high value fund. So invest in high value global companies that have great moats or have great economic advantages. They have control of pricing. They have great margins in their businesses. They have great cash flow, generating capacity. So these are companies that can withstand various economic, cycles. And so the Global Equities Fund for us, we look at it as this high value global stocks portfolio that we can finance more onto, businesses that basically will, looking at, we do a 5-year, 7-year projection. It actually have great growth, even in terms of revenues, expectations, and all that. And so out of that, we managed to choose a very good portfolio of investment companies, 18 companies to be invested into. I have a great exposure into them. And these are businesses we are happy to own for a very long period of time. So I think this is one fund that I would say for a longer period, as they say, medium to long term, I think this is a fund to be invested in. It's a fund to have an exposure in. We believe will highly outperform, in a medium to long term strategy.
Amazing. Is there any other?
Yes. The third global fund is our multi-asset strategy fund. It's denominated in dollars. Again, minimum investment is $1,000, and it gave a return of 41% in the last 13 months on the dollar. It's a global themes fund, and I'll let Wilson speak more on that too.
Global themes. There are a few multi-asset strategy funds in the market, but why Arvocap multi-asset strategy fund? That main thing. It's a global thematic fund. So our investment strategy in this fund is we identify global themes, we studied the markets, and we realized that every now and then, capital follows a certain trend. It's like a river. It follows, the river will always go back to its course. So that means that now we have found that capital follows a certain trend. So how do we help investors identify these trends and get an exposure or be invested in these? From your AI themes, from your EV to your healthcare themes. Now if you speak about healthcare, you're speaking about weight loss. So that's a theme within the healthcare sector. We are speaking about biotech. So how do we help clients invest in these global themes that by themselves, even choosing which is the best AI counter to be invested in, it become a problem, which will be the leader within this AI space. Then going in depth and looking at in terms of not only the market leaders, but other auxiliary industries that are benefiting from this. And so commodities that are being influenced by these global views. When we speak about geopolitics, energy, and the energy commodity sector, getting an exposure into that. When we speak about currencies, we've seen investors try to trade currencies, forex. And most people say, I've seen that some billboards somewhere in town that 95% of investors lose money in currency or in forex. So because you're investing without, you're just trying to tame the market. But for us, by studying markets and studying the macro policies influencing currency movements, we can help investors, or we can get exposure to these currencies in a more of a long-term trading perspective. So that's the beauty about multi-asset strategy theme as a global thematic theme. It's a fund that has done quite well. We still believe there's so many themes that keep on, every now and then, based on either geopolitics, based on policy, that property tax policy, CBK, or central banks policy, fiscal policies and such. So new themes emerge, themes fade away. And so for us, our team is always to be on point and to be active in the markets, looking for these new themes, helping us get exposure earlier on, but also helping us, exit themes before they fade away. So that's the beauty about multi-asset. I think it's one of the most exciting funds for us. It's quite an exciting fund. As you go through all these themes, and so it's still for a client, it's good and suitable for clients who are looking for that alpha return within their portfolio. You have built your portfolio. You did your money market. You did your Almasi. Okay? You are 50-60% in that nice base. Foundation. I call it a foundation. Strong foundation. You went to your equity funds to get a bit of now accelerator. But then now you're looking for that alpha on top of your returns. But that's where the multi-asset strategy fund comes in. So it's that gives you that alpha return. That gives you exposure to these beautiful global V's. Okay? So that's how you fit your multi-asset in your portfolio. So we categorize our risk from 1 to 7. Your money market fund, as Madam CEO said, it's your low risk. It's 1. Then you have your Almasi and your Gulf funds, that's low risk funds. And your Euro fixers medium term, or medium risk fund. Then when you come now just above medium risk is now where you find your equity funds. And then our higher risk is the multi-asset strategy fund. And as you have heard the conversation tonight, I was quite, even when saying that your foundation to be a fixed income funds, because they are low risk. Okay? Then from there now you add onto these others, the accelerators, the equity funds, they're a bit of a high risk. And why do we speak? When it's times when we speak about risk, times we may make it sound like it's a red button, don't touch, to investors. When we speak about that, your equity funds are above medium risk, what you're speaking about is terms of price volatility. Okay? That in the short term, for your equity funds, the price may move against your entry point. You may buy a counter now at 25 shillings, just because of some certain news or expectations. They didn't meet certain expectations. We have seen in markets whereby clients or investors were expecting the earnings per share to be 5 shillings. But then they delivered 4.9. Previous year, earnings per share was 4 shillings. There's a growth, right? Last year it was 4. Expectations was 5. They have delivered 4.9. There was growth. But because of these missed expectation, then the price comes down, right? Doesn't mean it was a bad investment. Just means that the price volatility will affect you in the short term. That's why you say that now, the way to, as an investor, to look beyond that volatility, it's in terms of identifying. That's why you speak about your equity funds being your medium to long-term goals kind of funds. It's not the fund for day to day. What's the change? How much have I gained today? How much have I lost today? How much have I gained this month? How much have I lost this month? If the underlying fundamentals of a business are strong, and as I said, we look at growth, the gross margins, the growth in that, the cash flows, the ability to pay, the leverage, the ability to repay the debts of that business and such. If the fundamentals are strong, then the short-term price volatility should not actually affect you. But because it means that in that short term, there may be that movement of prices, more movement in prices, that's why it classifies them as more of a medium or higher, above medium in terms of risk. So it's more of price volatility. It's times of, understanding the underlying nature of the asset. So it doesn't mean that it's red, don't touch, very risky. No. It means that in your portfolio, just look at it more as your medium to long-term portfolio. With that, now, whatever happens in this short term won't affect your investment mindset about that.
There's this fund called Arvocap GAO Fixed Income Fund, Distribution Fixed Income Fund. Who is it for? Right.
Thank you. Arvocap GAO Fixed Income Fund. This is a fund, as I earlier said, we've been in the markets for quite some time. And I, as a bond dealer for more than 15 years, I could see investors coming into the market to buy government bonds and mostly infrastructure bonds, laddering them so that they can be able to have coupons every month. So this bond is for those people. You realize the amount of time and maths you need to do to balance, to ensure that you have an amount coming every month. So a bond pays coupon twice a year. So there are 12 months. So you need 6 bonds to have a coupon coming every month. Some bonds have lower coupons than others. So it means on those 2 months, that bond you need to invest higher than you will invest in others. So you're seeing the maths that we are doing. Bonds redeem, especially the infrastructure bonds. So upon redemption, your maths is messed up. So there's a month that you are expecting, you used to receive this amount of money, the bond has redeemed, you've been paid back your money, you're like, what do I do with this money? And yet I need to sustain my income flowing, my cash flow flowing. So this bond is for those people who try to ladder, because Arvocap GAO Fixed Income Fund is where you invest a lump sum and then you start earning an income immediately. You choose your frequency, either monthly, quarterly, semi-annual, or annually. And this amount is constant. So it's not like the other option where this month you have a higher income, the other month you have a lower income. Also, this is a bond for those we call it this industry where people don't have an income every month, and where you get either a tender and you're paid a lump sum, or you're in the gig space where you earn on contracts, you have gotten a big gig, you've earned a huge amount of money. How do you ensure that you remain with cash flows? Because we keep saying cash flow is king. So you want to run your life on a daily basis or a monthly basis, pay your bills. So this is that fund where you will come and put that lump sum, and you know that now, come what may, every month I have an income. So you're able now to focus on to the next big deal. Another class of investors that need this investment are the retirees. So you've retired and you've been given your gratuity. Where do you put this money? Because you're given a lump sum and you want this money to sustain you for the rest of your life that you are there. So this fund, you bring in your lump sum amount and it's able to pay you a monthly income. This fund also has capital preservation, because once you put your amount, it is locked, it is safe. It's not compounding, it's not being invested, it's not trading, so your capital is preserved. But there is an income coming every month. So upon any change of need of this income, you're able to quickly withdraw the money and deploy it into another field. And so this creates generational wealth. Because remember, if you retired and this is the only money you are given, maybe this is the only inheritance you have for your loved ones or for your kids or for your grandchildren, you can put this money there. It sustains you for now that you need it. In your absence, the wealth is there. This is also a fund for, we can say, which other investors? The ones who are looking for just ensuring that you have an income coming every other time. So this is for them. Again, even business people who have heavy output or needs at a specific time of month. There is a businessman I was talking with, and he told me that towards the end of the year, he has heavy insurance payouts that he needs to cater, and they really mess up his cash flows. So if you will be able to solve this, then his problems in business will be okay. So he's able to put in a lump sum amount, and this pays an annual payout. So this annual payout will be able to sort out a certain expense that this client has. So that's Ngao. Again, for those people who are in diaspora, working abroad, they have beneficiaries here, or parents, or their families are here. Or even, I remember working with a certain family who told me that they take monthly turns to cater for their mom back in the village, and everyone contributes. This is your month now, it's your time to pay 10k umetuma, and the other one, you're the one, and there is even someone who is the prefect to ensure you have sent. So this fund is for them, because what we'll do, we will need to identify who is this, what is the amount of money that is needed, say 10,000. So how much do we need to put in today with Arvocap so that every month this money goes to mom at home? The other great feature about Ngao is that you can add beneficiaries. So you can be able to say, I'm investing this money today. It's my investment, but I want my mom to be paid. So every 9th of the month, an M-Pesa message will get to your mom, with or without calling Arvocap, have you sent, automatic. If it's quarterly, let's say it's school fees you're working on, you want to ensure that every quarter you have this amount of money, that this is the average amount I pay on school fees, you can actually choose a quarterly package whereby every quarter you'll receive this amount. For those who are having 3 terms, on the 4th term, so you eat that money, you say, this holiday for my family. So that's Ngao Fund for you, yeah.
Just one highlight. There's something that people usually confuse. Capital preservation and capital guarantee. Do you guys guarantee or do you preserve? Shed some light on that.
Okay. Let me
Yes.
take that question. When it comes to guaranteeing, I doubt there's any fund manager out there who will tell you that we guarantee. After all, even the authority has prohibited us from using such terminologies as guarantee to investors. But this is a moment where we help you in diversification, because this is the solution to what you're looking at. As you have heard from the equity and multi-asset strategy funds that my colleagues mentioned, which are wealth builders by themselves, and the Almasi and Ngao and money market fund that we have also tackled, which are low risk but accumulators, then by blending these two sort of products, then you're able to achieve what we are calling capital preservation. Again, capital preservation is a strategy we use as a firm. Investments desk uses, in whatever he has mentioned, the risk management framework, as you have gotten a sneak preview of what it is. You can hear there's a lot we are putting in place to preserve, to ensure that the investor's capital is not exposed carelessly or recklessly to risk. So when we manage risk, actually, CIO tells me, I wake up in the morning to manage risk. And when you manage risks, as we say, then the returns just float upwards. A fund like Africa Equity Fund is a fund that shocked us when we got to see the returns it's giving, because we were not there to chase this return. We were there to manage risks and taking opportunities in the markets. Then this is the return that appeared. And as you know, in the CIS, this is the unit trust framework. You disclose and distribute everything you have earned in the fund to the unit holders. So that's exactly what we did. So when it comes to guaranteeing, that's the strategy I would want investors to look at. Because when you are talking about guarantee, it's like you're asking what is the risk involved, and that's a question you asked. And so when you understand the risk profile of every investment you're taking on, then we come in and help you with mapping your investment into a portfolio that is balanced. Then your question will not be whether capital is guaranteed or not. Your question will be, how am I working towards my goals? How am I getting there? Yeah.
Right, amazing. We are in safe hands, right?
Yes, you are.
Yeah, because that guarantee aspect is quite, people don't really understand it. And I usually say this, if a fund is giving you a return of more than 1%, your capital is still there, right? So if you're giving us a return of 20, 30%, and we are here, thinking about capital preservation, you're not yet there. We could be debating about that when you see you touching one figure, 7, 6, right? So as long as a fund is giving you a positive return, your capital is okay. Your capital is okay. All right, one more thing that I was told to come and ask you. All these funds, 100,000 minimum deposit, right? Then there is a fixed period of 6 months. There's one question that people ask. Probably Priyanka, you are going to answer that. Yeah? In this 6 months period, I have invested 100, that's the minimum, but I keep on topping up. Does the top up still, go for, is it still fixed for the 6 months? Or once you start the fund, you give it 6 months, then after that, the fund is open. Another thing is, why the 100,000? People are tired of putting money in a money market fund, and they are missing this return as they accumulate it. Can we go to 50? Right?
Okay, those are good questions. The lock-in period is basically the period in which your funds are locked and you can't withdraw. Our lock-in period is 6 months from the first initial payment. From your first initial investment is a 6-month lock-in period. So if you keep a simple timeline of Jan to December, and you've invested 1 million on 1st Jan, that means 1st July, it's unlocked, which means you can now withdraw it. You can withdraw part of it, full, or nothing at all. If you don't withdraw anything, it still accumulates the return that the fund is giving. Now back to our timeline. Let's say in Feb, you invested 2 million, which is now a top-up. That still also means that your lock-in period will end on 1st July. And after it opens, it's open for the entirety of your investment horizon. Yeah. Regarding the minimum investments, our shilling funds are 100,000 shillings minimum investment. Dollar is $1,000 and ZAR is 15,000 rand. But this is all except the money market fund. Our money market fund initial investment is 3,000 shillings with top-ups of 1,000. And that's why we've kept that so low as well, is to help accumulate your funds in the money market to then get more opportunities and invest in the rest of our 9 funds.
And maybe just to mention, we said that our strategy is wealth management. So here we are coming in, helping you to level up. So if you're not at 100,000, let's help you grow towards 100,000. At least you'll be saying, that's my first goal that I've hit. You get. Again, just looking around the markets, I think you will agree with me that our funds have among the lower minimum. I know some funds around have higher minimums. And so we feel that ours are still on the lower side, still trying to help investors catch up with the funds you're saying, the sweetness of investing. Yeah.
So you have to make us keep on chasing the goal.
Yes, indeed.
Even continuous contribution.
Yes.
There's also a bit in realizing, I've seen a lot of investors, the moment they hit the 100,000 and they can level up to Almasi, basically the joy that I committed myself, I'll be saving 1,000 every day, I'll be saving these MGs. We like giving this example, which has now grown, that one of our greatest clients, who started with us in June last year, in the motorcycle or border business. And once he enjoyed that leveling up and token up to 100,000, moved to Almasi and all that, like a good disciple, he went out there and spoke to his colleagues. And so one of our biggest beautiful clientele base we have is actually the border guys, who every day, whatever they make, they put into their money market. Ikifika 100,000, they push it to. Now you can imagine now the discipline and you can see and how they do it. There's a chronicity in which they do it as a group for them to chase and achieve their dreams. So our products, as she has said, it's to help everyone have a platform to build with. Doesn't matter where you start from. Now your starting point may be the 3,000 and build up to 100,000. To some, our starting point is we want to put in that 1 million, 10 million or such. But whatever your starting point is, we're here to work you with your journey of building right.
Wow, that's great. So you're saying that even a group, a chama, they have an opportunity to invest in these funds, right?
We have a lot of investment groups or chamas who come together. And chamas, if not taken care of, they may end up just being a savings corner or where they just do merry-go-round. But when they start understanding what opportunities are out here that they can use to create wealth, then this is usually a game changer. Remember, as a group, you're able to bite risk better. So the funds we were talking about, and we said they're wealth builders. These are good opportunities and good funds for chamas because they'll take on to them. Our CIO is emphasizing on the duration of investment. You'll find some of these chamas have been existing for more than even 10 years. I mean, one that has more than 20 years. But these are vehicles that can be used to take on some of these special funds. And so I am usually quite, I won't say sad, but let me say sad because now I know of chamas who put money in money market funds.
There's a confusion between NIV fund and a yield fund. Most of your funds you see NAV fund, then yield fund. Money market fund is a yield fund and others. What is the difference?
NAV funds, yield funds. NAV meaning net asset value. The NAV funds, we have 8 NAV funds and 2 yield funds. For yield funds, we have money market and GAO. And one characteristics of this is the distribution aspect. That if you look at money market, accrues daily, distributes monthly, then compounds monthly, the money market fund. And so there's this aspect of this income distribution and the yield of the underlying. So basically it's the source of income or the underlying source of income for the for those investments. If you look at your money market, the investments they invest into, your T-bills, your it's rate of return. You give that's what that rate of return is. Let's call it 1-day T-bill. And so those are the yield funds. If you look at your GAO funds, that's the income distribution from the returns and on government coupons. So those are your yield funds. When you look at now the NAV funds, so this is net asset value. And so for them, the return is measured based on growth of net asset value. Why are you speaking about growth of net asset value? Because they have the aspect of trading, capital appreciation. That part of where you are getting your return in an NAV fund. It's probably you bought a board in Almasi. You bought a board in the private market, came to the secondary market, sold it at a premium. And so part of the return over that period, there was the yield, the return from accumulated interest, but then there's also this capital appreciation from trading this board. If you buy shares, if you bought a share at 20 shillings, moved to 28 shillings. So basically the return over that period is from these accrued income, or if you realize it, the capital appreciation over that period. So that's the NAV funds. So basically it all boils down to the underlying source of returns for this or for the fund itself. So that's why you classify it as either as an NAV fund, especially for the trading or capital accumulation funds, and then the yield for distribution, income distribution funds.
Amazing. Thank you so much. Now, let me just the final parting shot. What do you tell people who are listening to this conversation? What is that one thing that they need to do?
Thank you all for joining in today, and for those who listen later, thank you. I think a big question that we've tried to answer, which has come through so many channels, is why 10 funds? Why do you have 10 funds? And the whole point of 10 funds is because each one fund does not fit into any portfolio. In terms of clients' portfolios, one fund will not fit everywhere, and that's when the whole portfolio building, wealth creation, etc., comes into play. And yeah, so that's. I hope you got a lot of value out of today. We are open for questions. You can always send us an email or call us or walk into our offices, and we're happy to assist.
Okay, it's been a great evening. It's been a great session. Just helping clients and investors understand basically a bit of a behind the scenes on how we deliver these beautiful returns. I know the question that has been in the minds of a lot of investors is how you getting these returns. And for us, as we said, it's basically our strategy in terms of looking for these opportunities, our risk management strategies, our core values that you hold within our investment portfolios, from liquidity management and even how we manage price volatility and all that within the portfolio itself. So these are some of the factors that help us deliver these beautiful returns. Ours is a commitment to always continue, looking for more opportunities, managing these opportunities better for investors, delivering above market returns or beautiful returns for investors. So that's our continued commitment, and we are very grateful for all of investors who have supported us through this journey. For all of them that all of you who have joined us this evening. And as Priyanka has said, if you have any questions about any particular fund or any particular investment that we want to understand more about, kindly we're happy to share a response on the same. I know over the next 1 week, even as we said the recording of today's session, some of the queries that have come through various social sites will basically have an FAQ, probably answer as many as we can. So we kindly look forward to that for any of the queries that you may be having. So asanteni sana. We are very grateful for the opportunity they have given us to be your wealth advisors, to be your fiduciary agents, to manage your wealth, to help grow your wealth, and to help you build portfolios, to help you diversify. And our commitment is to continue that innovation. One of our greatest things is innovation, not only in product, but also in strategy. Over this night, you have spoken a lot about strategy and our investment strategy. And ours is always to continue innovation around that space to ensure you always deliver the best for our clients. Asante sana.
Thank you so much. Monica, before you you give your parting shot, the online investors are asking a few questions. I want you to, do you have any Sharia compliant funds? Then also, what is it there for our children? Do you have funds where we can teach them the ability to grow money and create wealth. And the last one is, probably you can also chip in, even if we have, close. Now, your management fee and all the fees for this fund, people are asking, why can't you just, lump them up into one, fee? If it's 2% instead of 0.5, just one fee.
Okay, let me start with the last one. You realize the strategy we've come to the market with is not any normal or common strategy. And for us to derive the returns we have seen is because we have adopted consciously the active management strategy. Other fund managers may use the other strategy, which is passive income, mostly maybe because of the funds they manage, the pension money. So for this reason, we as the business owners or co-founders wondered, how can we ensure that this strategy is sustainable? It is by making sure that the teams that are working behind are well compensated. And how do we compensate them? It is by the return that we receive. So that's why we have very low management fees, so that if we don't work hard, then we don't need to earn those hefty fees. And again, we are also looking forward to ensuring that we have the right and the sharp talents. I can tell you, the team we have is a brilliant team. And we will only endeavor to ensure that we give you those kind of returns, if not better. On the junior accounts, so management fees, performance fees, all those are structured actually in the favor of client. If you even calculate our fees, our returns net of all fees, we are still above market returns. So onto the other accounts, the junior accounts, that was part of my parting shot, but it's good it came. So in the next one quarter, or in this quarter, we do have new products or new releases that are going to be released out. Part of them is the junior accounts. This is a product that you can be able to invest for your child. And what do we mean? It will not only be for you to invest for them, but for them to also join in the investment space. We will have money market fund space for your child as a piggy bank, and then we will have the other special funds on the back end for you as a parent to use them as the investments towards these children. We will release it and we will give all the details about that. On Sharia funds, indeed we have two Sharia funds. We have a dollar-denominated Sharia fund and we have a case Sharia fund. We will release the first fact sheets on these Sharia funds. These are funds that we may want to be able to sit down with our investors and take them through. Yes.
Where do we begin investing? Do we come to your office, or we can do it right from our comfort of our homes?
Yeah. Yep. So let me start with just adding on to what Madam Siwa said about the junior accounts. In April, Priyanka and the training team, they did a very beautiful thing. They introduced investment masterclass targeted towards the teens. The turnout was phenomenal. A lot of actual parents were asking, can't you put this training earlier in the holiday sessions? So just to announce to our clients, Teens Masterclass 2 will be here with us in August. From next week, I'll see forms or basically communication on how you can register and book a slot for your teens. It was a great session. It was a great 4-day session, so whereby they were trained from your nitty-gritties about investing. Then the tools that were given, from an investment dictionary to a financial planning booklet and all that. So basically, it was quite heavy value addition to the teens that, and a lot have been asking, do we have session 2? How do we come back to this? So Teens Masterclass 2 is coming, and we'll be using this session also now to launch our junior accounts, so that now we are not just training them, but we are giving them the tool. We like giving tools, not just speaking. Let's give you what will actually help you achieve that. So even as we train them about investing and all that, then we bring in the junior accounts, to help you with that. It's a very beautiful product to be within your application. So be on the lookout. Once we publish it, we've been testing it. It's very beautiful. Ajo, early birds, if you want to be part of the early birds, Kaide shooters, an email will give you an early bird experience of how the junior accounts are. Looking forward to that. In terms of trainings, yes, we do offer a lot of training. We believe in investor education. We believe in having such forums and have such sessions that we can speak to our clients just to guide them. But we also realize wealth building is a bit personal. So if any investor would want to book a session with any of our wealth advisors, kindly reach out to us on our clients@arvocap.com email. We'll organize a 10, 15, 30-minute session with any of our wealth advisors to guide you either online or physically in the office. As a group, as an employer, as a business, if you want us to come and speak to your colleagues, you don't want us to come and speak to other the people in your workplace, we also do that. We do corporate trainings, we do executive trainings. We are working with very big brands, some top tier banks in the nation, some top tier manufacturing firms in the nation, just to offer them these investor training, to their workforce, to the executives, to their board members, or to the different cadres within their workplace. So, we can do that for you. So, can you reach out to us at clients@arvocap.com, and we'll organize this for you.
Amazing. Any other addition, Priyanka?
Our app is quite seamless. The whole point of our app and our portal was to make it a very paperless journey for you. It's quite simple. It gives you everything you need, from topping up to investing to selling your units to withdrawing your funds to switching between funds, adding your beneficiaries, etc. We have a lot of training sessions as well on how to use our app, and a lot of guides on how to do that as well. And you'll be able to find that soon as well.
All right. Let me give my parting shot and just first of all take this chance to thank you, our investor, our potential investor, that person who is sitting there wondering, is this real? Are these returns real? To just thank you for logging in for this webinar. Thank you also for the questions you present. I think that's what mostly we were tackling. We bulked them up, and that's what we were able to answer. It is by your confidence that you have taken to invest in us or with us that we am here to just tell you thank you. With assets over 3 billion and more than 10,000 clients, we honestly don't take that for granted. So we want to thank you, and we want to also tell you that we have the solutions that you are looking for towards this journey of creating wealth. We will sit down with you. You're most welcome to our offices, as Wilson said. Come to our office. We sit down with you. We are able to evaluate your portfolios. We do portfolio restructuring. We do portfolio optimization. We also help you create portfolios from the beginning. That said, we also have a private wealth desk where we offer you a leveled up kind of wealth management services. And we will sit down with you, be able to have meetings with you on a quarterly basis just to review, are we heading towards your goals or we are deviating? So kindly reach out to us. We are here for you, and we are going to help you in all the investment needs you have. Let me also take this chance to thank you, Alex, for agreeing to come and moderate this panel. I think it was important for us to have an outsider coming to tell us what are those questions people receive. And I know you received them firsthand. So I appreciate your time. Thank you, my co-directors and team, for just braving up, showing up every day, and also to the whole team Arvocap, the whole crew here, and everyone out there. I just want to wish you a lovely evening, and thank you so much for logging in. Thank you.